Welcome back. It is Tuesday, and we are in desperate need of a Jonathan Corpina interview, especially about the banks. Jonathan, great to have you here. We had a mixed deluge of bank earnings today. Let's start off with JP Morgan, which beat expectations, persevered despite that, squeeze in margin interest, but loan growth was lower. What does that tell you about consumer confidence?
Yeah, it's telling me that consumers are much more, in tune with the economy and aren't going to put themselves in too much of a debt path with so much uncertainty as to how our economy and how our markets are going to continue. So I think actually, as I don't want to say as negative as that headline might be or that point might be, I think it's really telling. I think it's very good to see that, unfortunately, yes, their lending business is down, but that also just means that, once again, that people are, whether it's businesses or individuals, are really in tune with the economy and not taking too much risk going out too far.
And also good news that JP Morgan did beat. Now let's move on to Goldman Sachs. That was shocking. They were under their top line, which is a very rare thing. Now that company has been going through a lot of changes from, dealing with the mega wealth to maybe, a more streamlined consumer with Marcus. Was that a bad decision?
I think they've, they look at all silos of their business and they try to make sure that all of their silos are running full steam ahead. And then when there's ones that are there that aren't, they cut the cord pretty quick. I also think, for Goldman Sachs, the expectations are always so high when analysts put their forecast out there of what they think they're going to get there. So a little bit of, might be a little bit of a mystery there because, once again, if the bar is so high, it's hard sometimes for them to achieve that. But I think right now, what we saw from Goldman is once again like a good insight to really what they're seeing, from their clients, whether it is institutional large businesses or whether it is high net worth individuals.
And we're seeing, we've seen Goldman Sachs, we've seen that stock react a lot lower. I think it's trying to make a comeback after that news today. XLF, the financial sector, is up today. What do you see as that as a whole?
Once again, we've talked about this before in the past. That sector has been lagging. I think if you look back over the last 3 months, it's essentially flat. So, the activity that we're seeing today is clearly going to help them, and the headlines that we're going to sit there see with them is going to help them. But that is one sector that just has not been able to really get far enough ahead to build in some sort of cushion.
Yeah, and analysts were expecting a lower, a dismal guidance for banks this past quarter. So do you see XLF maintaining those gains?
I do. I think as we continue in the fourth quarter, we'll see that. This earnings season is certainly going to help that. Putting any sort of China deal in play or out of play, and any of those geopolitical headlines, I think the financial sector is one has been lagging behind, and the boost that we're going to see today in the early part of earnings season is going to help it.
We're going to get a lot more bank earnings. I know that you've been telling us to focus on financials, and guys, it is finally time to do that. Thank you so much, Jonathan. We missed you, and we will see you next week.
Thank you. Welcome back, Olivia.